Alrighty, guys, welcome to tonight's charting session. Hopefully, everybody is doing well. Happy Thursday. So, today was honestly pretty good. Again, morning action, like we kind of expected, was really how it's been pretty much this whole week. The morning action has been very choppy and really not efficient as we would have liked to see, but the PM has been super, super clean these last 4 days. So, going into the PM session, I did have a really strong bias of a market maker sell model, which we'll get into. And going into the morning, I started to point out, and I was posting charts earlier in the chat of how all of these lows you can tell is engineered sell side liquidity. And how you can tell that is going into the morning, again, when market was here, I was pretty bearish going into the day. And the reason I was bearish going into the day is because all of this engineered sell side liquidity, all of these lows that had not been taken, we had a low here, we had a low here, we had a low here. Notice there was no stop rate of us going higher. Like if we were going to have a move higher, not a single low here was taken. We had engineered sell side, engineered sell side, engineered sell side, engineered sell side. This looks to me so clean that this most of the time is going to get ran through all at once. So going into the day, I was like, I want to see these lows get ran through. Now, going into the morning, I had a little bit not a married bias, but there was trade that I think I was too married on my bias and I didn't recognize it. So going into the morning, the first trade I ended up taking, we ended up working our way back down, ended up coming back to this 1 minute. Again, rejection of the bigger time from imbalance. We got a lot of displacement to the downside. I was looking for price to work our way to the standard deviation level, which was right here. So in the 15-second, or in the 1 minute, I zoomed in. I took a 15-second short entry. My first one got stopped. Again, I was way, way, way too zoomed in here. I traded low size. First one got stopped. I entered here, put my stop up here. Way, way, way too tight, too zoomed in. This should not have happened. Realized there was really no reason for me to have gotten out of this. We got displacement. I entered back in. My stop was at the high. And I was looking to see, again, all the way back to these lows, but my main target first was going to be this standard deviation level. So we ended up continuing to chop, waiting. Came back to break even before finally selling to the standard deviation level. And then this is when I took off most of my position here, let the rest go to break even. Put the rest of my contracts to break even and let the market do its thing. Now, the problem here, not the problem, but we did come back down and continue to hold this 5-minute fair value gap. Came back down into this order block. Started to bounce our way back up. From here, when we continue to reject here, oh, also, there was an SMT here, wasn't there? Right here? Which I didn't recognize at the time either. I'm pretty sure there was. Let me check ES. Yes, there was here. So there was an SMT here. We started to work our way up. This, to me, looking back, this is super clear now. But at this point in time, I was very, very married to this short bias. So I was scaled out of my position. My stop was at break even. We started to work our way back up. This, looking back, looks like a really, really clean long. But this coming back to me, I still was very short biased. And looking back, there was just no reason for me to be. So this next trade I took, I should not have taken. Again, recognizing what am I doing right, what am I doing wrong. I will take, again, full accountability. This trade should not have been taken. We did have an SMT here. It didn't look bad, and I wanted to see this become the manipulation and then having this kind of move up to stop rate before going lower. But I immediately slapped a short. Again, what was good about it is I was only in 2 cons. So again, what did I do right, what did I do wrong? Should I have taken this setup? No, looking back, I didn't. It doesn't look clear enough. What did I do right? I traded only 2 contracts, which is like a quarter of my size, if that, right? So I'm fine with that. We ended up moving up, got stopped on this, and then realized, again, looking back, this to me is super, super clear now, right? Came back to standard deviation. That 5 projection ended up, or the 5-minute fair value gap ended up getting respected. The order block got respected, displacement to the upside. This to me is super clean to most likely continue higher. And again, like Nemi was talking about, is I was too early expecting this to become the market maker sell model. When you zoom out, This is just rebalancing price to, again, generate more sell-side liquidity for later on in the day. All of these moves, a lot of the time when we're having a bigger time frame model, which is like the 5-minute or the 15-minute, when we have, retracements like this, a lot of the time we get caught up in the idea that this is the model, right? Now, a lot of the time when the model actually does occur, it's no-brainer. You're like, oh, this is it completely, right? But sometimes you get caught up in guessing if it is or not. And that's why it's so important to play the rebalance, right? Because you might get that internal sell model, which this is the internal sell model, but this is just retracing price to, again, back to OTE of this range, tap back in OTE, tap back into the standard deviation projection from this initial manipulation, and then we start to displace back up higher from the SMT, right? So this is now the buy model internal to work our way back up to new highs, right? So this will, again, too zoomed in onto where I'm expecting the bigger time frame model to be. And this just becomes, again, generated sell-side liquidity for us to then get taken later on in the day. So we start to work our way up. From here, I didn't touch anything, right? No touching. Again, here as well, where I'm like, okay, buy side's been taken, displacement, fair value gap. This doesn't look enough yet, right? It doesn't look clean. This is just continuing to generate sell-side liquidity. Notice none of these lows are getting displaced through. None of these lows are getting displaced through. We end up forming another SMT, right? Again, noticing all of these lows that we leave along the way, it's looking so clean to, again, set us up for a move lower because we have all this generated sell side to the move up, right? So then we move higher. Again, I hopped off around here. Anybody take this long right here? Right when I hopped off, I said that this was exactly what I was looking for to take a long, which was come back into this imbalance, stop out, and then move back higher. Did anybody take this right here to target this high? I missed it, but it looked really good. Yes, me. Yeah, this looked really nice as well. And again, going over this, SMT at the lows here, displacement to the upside, pull back to the 5-minute. Again, we stop, raid this internal low. Once the entry model here, it would be this 1 minute getting ran through. Once this 1 minute gets ran through, you can take a long and then target the internal buy side level. So that would have been really nice. So from here is when we understand what we want to do. The 5-minute starts to look so clear. Now, why does it look clean now? On the 5-minute, we get SMTs at the highs. This isn't like a 15-second SMT. This isn't like a 1-minute SMT, right? This is a strict high of day SMT where we're starting to get rejection, right? And we have all of this generated sell side, and we're at consequent encroachment of the 4-hour, right? There's a lot of confluence here. We're at consequent encroachment of the 4-hour wick. We're at a 1-hour fair value gap. We have a lot of areas to reject here. And this, to me, is starting to become what we expect to want to see the manipulation move. So what am I looking for here? There's two different entry models here. The first one is once that 1 minute started to sell off, I took the imbalance. I'm waiting. Once this fair value gap gets ran through, I took a short here. Took a short, stop up here, and I entered half my size. I entered 5 contracts. I was looking to enter 10. Now, again, why are you saying, Justin, 5 contracts? I thought you were trading half size. This is the A+. This is the A+. When I see A+, and it's no-brainer, I will trade my full size because I'm taking advantage of that. And today, for me, should have been a 20K day. And we'll get into that because I missed the main add-on on most of my contracts that I wanted to add by like literally 1 tick. But I entered half size here, and my reasoning for this is because I wanted to wait for the displacement below the breaker to then add the rest of my contracts on the breaker. So I wanted to get the best fill here because it still was really nice confluence. We came down. Now, once this started to get displaced through, I know we are ready to go. Look at the 5-minute. Notice how clean this looks. When it is a no-brainer, when it's so clean, and these are the setups we need to take. I have a question. When I say this looks really clean, is there anybody in the chat that doesn't understand why? Doesn't understand why this looks good? And needs me to explain? Okay. Number one, the first thing I'm going to say is after tonight's charting session, I want everybody to that said I don't understand this to go watch my market maker video. Watch my market maker model video on YouTube. You need to watch that first because that will give you the best understanding as to why this looks great. In the market, we are constantly generating liquidity, right? When we understand buy side and sell side of the curve and understanding market maker models, the whole point of buy side and sell side of the curve is generating liquidity, right? Market needs liquidity to move. When we end up moving this way up and we end up taking no lows along the way, we are generating sell side liquidity, right? Generating sell side. All of these lows start stacking together, which becomes low resistance liquidity run in the market maker model, right? So what are we looking for in a market maker model? I am looking for I want to see a smart money reversal at a point of interest. What's my point of interest here? 4 hour consequent encroachment, 1 hour fair value gap. I'm looking for manipulation. What's my manipulation? We're chopping, we're working right here. This move higher, high of day gets taken. We have an SMT at the highs and we get displacement lower. Everything I've needed to see has happened, right? We've had manipulation. This becomes my smart money reversal. We get displacement through a low. Once this first low gets taken, we know all of these lows are getting taken. We know all of these lows. There's no reason for us to go higher now. And we're immediately going to inverse this entire move. Get to, again, take out all of this low resistance liquidity. All of this becomes low resistance liquidity. And I said this going into the morning. I said all morning, guys, we are just going to continue to generate sell side. I expect this to most likely get ran either today or tomorrow. Once this move happens right here, we know that day is today. We know that we're going to run all of this. And you might say, Justin, how is that impossible? Like, how do you know? Conviction and constantly seeing it happen over and over and over again. So, like I say, after this, I recommend everybody to just rewatch that market maker video model because it'll continue to get in your brain of what I'm saying and it'll go more in depth of what I am right now. But once this move happens and we get displacement lower, I was looking to add the rest of my contracts in the breaker. Looking in the 1 minute, my where I was looking to add was right here on this line. We moved back up. I was looking to add 9 extra contracts, and I missed my fill by 75 ticks, a point pretty much, 1 point. Now, am I going to sit here and whine about it? No, I'm not. I don't care. I don't care enough to, because I know that there will always be more opportunity in the market. And the way that I'm looking at this is saying, I had so much conviction with this. This was a no-brainer trade. I absolutely knew this was going to work for me. High conviction. I put on risk. Didn't get filled. I still got paid for it. This is just another day in the office where I get the opportunity to build conviction. The more I see this happen over and over and over again, the more it gets added to the arsenal in my brain and the more confidence I have in the market, right? So even if I'm not getting something tangible from this, I am getting experience and knowledge, which is much more valuable because that experience and knowledge can make me tenfold of what I would have made today, right? So that's how I look at this. Is it a little bit salty? Of course, right? Who would not be salty if you would have a 10, 20K day? But I'm up 7.5K on the day, missed my main fill here, let the rest of my contracts go, right? So I'm not upset about it. We end up continuing lower. This becomes second stage distribution right here on this 5-minute fair value gap. 5-minute fair value gap ends up opening up. We come up. What do? Stop raid. Stopping out all of the traders that are trailing their position, that are short, moving their stops from the highs, right? Because if I'm a retail trader and I'm short, and let's say I'm trailing my stop, right? Let's say I get in here, right? We move lower. We put a high in, we move lower. All right, I'm going to put my stop to this high. All right, I'm going to put my stop to this high when we can go lower. All right, we make a high. I'm going to put my stop to this high. I move my stop to this high. This becomes second stage distribution where we move back higher, stop out all those traders. Again, still respecting the 5-minute, still respecting the 1 minute before continuing lower, right? So there's multiple opportunities. Did anybody take the second stage distribution entry, which would be in this fair value gap here? Me, that's the one I took. I took the inverse. Nice, yeah. Again, there's multiple points in time where you can take entries off this model, right? There's multiple points of time. Now, obviously, the best one's going to be up here. Obviously, the best one would be when we pull back to the initial breaker, but you can still chase the second stage, right? The second stage is still a valid entry. I took one last trade later in the day, which was actually right here. Once this level didn't get taken, we ended up taking this. We had a little SMT. I jumped in just a couple more contracts because I knew we were going to continue to sell and most likely take all of these lows. Now, why did I expect to take all these lows? Low resistance liquidity from the morning, but also ES was super bearish. This was where ES was at the time. ES at the time, where NQ was, 5 minute on ES had just retraced back to this 5 minute fair value, got back to the breaker. I was expecting us to reject and had a lot lower to go here. So I expected NQ to most of the time, if ES was going to sell, NQ was going to most likely take all these lows. And the standard deviation projection had not been met yet. So again, taking your manipulation move, standard deviation projection right here, took a little scalp entry, sold off, and I took it off right here when we tapped the 2 to 2.5. Just a little bit of a scalp. From here, after this low gets taken, I wouldn't take this short entry. Now, you could, but it's low probability, right? Once the sell side level gets taken, we really don't want to take another short. We really don't. We want to let our runners do its thing. If you're in a runner after this and you're continuing to trail it, let your runners do the job. But once this initial low is taken and once standard deviation has been projected, you shouldn't be touching shorts, at least with normal size. If you want to scalp it with super small size, go for it. But you shouldn't be putting risk on the table when the sell side level is taken, right? Because the model has then been complete. And then again, we sold off all the way, taking out all the engineered liquidity. And again, notice what it is. Low resistance liquidity run. What does that mean? When we have a low resistance liquidity run, it means it will all get taken at the same time. Most of the time, it'll all get taken in one session or in one time frame, right? At this point, right, all of these stacked lows, how long did we end up creating all these lows? 19 hours. In 2 hours, we took all of those lows. And we expect that because it's low resistance liquidity, right? And the more that you see it and the more that you can recognize the model, the more you'll recognize when that will happen and when times in which you can expect that to happen. So does anybody have any questions on this model? This was super, super clean today. So is the 5 minute getting disrespected and displacement through the low, the light bulb moment for the model? Also, do you think we not return from the higher 5 minute fair value gap at the top of the sell side of the curve because when we displaced through the previous 5 minute bullish fair value gap, it created a BPR? Anything to the left, I don't care. I'm not looking at anything here. Any imbalance to the left of us, I no longer care about. Because if you're focused on this, you're overthinking. This is the model. Once this happens, nothing here is relevant. We know we're going to these lows. We know we're going to. So I'm not worried about holding any sort of imbalance to the left of me. The hindsight light bulb of when to take a trade is once this low gets displaced through. Once this low right here gets displaced through with this move, again, notice displacement. We are not just, taking this and then moving back. We are selling through this level, right? We are selling through this level. That is your sign. How did you know that 930 wasn't the manipulation? 930 wasn't the manipulation. Great question, because no bigger time frame high was taken. Always, most of the time, it will never look like this. Let's say we have a bigger time frame balance. It will never look like this. How many times do you see something like this happen? Let's say this is a 15 minute. When do you ever see something like this? Never. Maybe sometime, maybe a couple times, right? This initial move, most of the time, is always to rebalance price before generating sell side, moving higher, accumulating, and manipulating, right? Power of three. When we are looking for manipulation, there's multiple things we are looking for. We can either look for smart money reversal, power of three, right? What would power of three look like? We're coming into this area. I want to start to see us accumulate here, right? Generating sell side, manipulate, and have displacement, right? This becomes my power of three. This is how I know we are now ready, right? Because it's an entry model. There's a reason for it, right? We have accumulation, manipulation, distribution. This becomes AMD, right? What else am I looking for? Generating sell side, smart money reversal. Generating sell side on the way up, generating sell side on the way up. We're working. Something like this. Displacement back inside the range. And we get something like this, right? Internal buy side gets taken. And we have an SMT. Right? It'll never just be this, right? It'll never just be that. So looking back, why wasn't this manipulation? This was just the move to generate more sell side. Again, we don't expect it to just be like this. It can. But a lot more likely, the bigger thing that we're looking for is this, right? More structure. And it'll look so much clearer too. It's very clear that was a sell model, but during the session, it's hard not to take internal models before that. First trade of the day, I did take cons off at standard deviation. I guess that was just putting a new low in for liquidity. We're going to just tap a higher time frame like the 1 hour and sell straight off. Just hard to see live. Again, the more that you see it, and the more that you time the journal, again, every time that we come into the charting session and we start to see these things and we learn from it, the more that you come into every single day that you trade, you're going to recognize and say, hey, I've seen this before. This isn't ready yet. This isn't ready. And when you wait and when you become so picky for the time where it is a no-brainer, when it is a no-brainer, like there's times where how many of you guys go into the trading day and you're like, this looks good. I think this is good, and you take a trade. And then there's times where you're like, oh, this is it right here. I'm taking this. You should be only taking setups that are like, oh, this is it right here. And okay, of course, I'm guilty of that too. I take trades that aren't super, super clean like this because we don't get them very often, at least in these conditions, right? In better conditions, this will happen more often, right? But we haven't been having that recently because we're at all-time highs. It's the first month of the year, right? But when this does become, this is what we're looking for, right? Clean, Nemi. This move in the AM session was just a move to generate sell-side liquidity. What makes you take a trade on NQ versus ES? Because NQ draws cleaner. We have all the low resistance liquidity. ES is just kind of slower action. See, consequent encroachment is the midpoint. So whenever we have big wicks like this, a lot of the time, consequent encroachment, which is the midpoint of it, is going to be the point in which we respect. Maybe a basic question, but I noticed that ES didn't end up taking all the lows like NQ did. How do you decide to take the sell model on NQ versus ES? Because NQ is you can recognize the model. ES, you can't recognize the model. Notice there's no generated sell side. There's nothing clean about this. We just have a big move here and then sell side liquidity here, right? That's it. NQ, we have clean lows that we know are going to become generated sell side liquidity. And NQ is a cleaner price mover in general. Like, I normally don't trade ES because NQ is normally what I want to trade if there's a clean model. And that's another thing that just comes with experience, is recognizing which one to take based off of the setup. Entered in this long on a 1-minute unicorn on NQ. Looking back, I would assume it didn't work because we just had finished the end of the market maker sell and there was no reason to trade anything, but just wondering your thoughts. Yeah, wouldn't touch it. Wouldn't touch it. Again, sell side was never taken anyway too. So you were taking longs in the sell model on the bigger time frame. What's good, bro? I'm a little late, but this is a heavy in my notes today. Noticing that the first swing up, then displacement down can lots of times not be the actual SMT/manipulation move. Likely will come back up after the first initial swing, working on spotting on this and being patient. I noticed today it was like 2 hours before we actually had the swing up that caused SMT and manipulate and then provide the beautiful melt, trying not to get chopped up in between. Exactly. And again, that's why risk management is so important, because it gives you the opportunity to, even if you are going to take those trades, even if you do make the mistake of taking something that might not be the best setup, you're still protected by it, right? I took a loss in the morning. I took 2 losses. I first got stopped out here, and then I won on this, half my position off. The rest I got stopped at break even, and then I took a really bad trade here. I was break even after those, right? 2 losses, and one of my trades went to half my PT, right? Half off, and I was break even because I knew I shouldn't be putting on size, right? I was down $100. When you look, okay, listen, guys, when you look at my red days and you look at my green days, notice the difference. Notice the difference and ask yourself, why? When do you guys see me put on size? When do you guys not see me put on size? This entire week, yesterday I paper traded. Completely paper traded yesterday. Was there any A+ opportunity? Not really. I knew most likely going into the day there wasn't going to be. I am not focused. Again, this is the difference between being focused on cap and on being what you need to be focused on and what the market is actually showing you, right? Versus taking it into your own hands and thinking you can somehow beat the market. You can't. The market tells you how to behave. It tells you. Listen to it. And have the discipline to trust it. Because going into some days where you know are going to be, choppier days, no news Monday, no news Tuesday, displacement moves in the overnight session, why put on heavy size and risk knowing that you are in lower conditions, right? Because you're focused on something else. You're focused on growing your account. You're focused on getting a payout. You're focused on getting funded. That starts to get in the way because you're looking for opportunity that's not there because you simply want to press a button just so you can go look at your Top Step dashboard and see an extra tick up. Instead of being focused on what is the market actually showing me. If you're focused on strictly building good habits and strictly taking and waiting for only good setups, and when the market is not providing those setups and when the market isn't providing good conditions, you're focused on capital preservation and you're focused on patience and discipline. Again, like we said today, like I said yesterday, the market is constantly giving you opportunity. That opportunity is not to take trades. That opportunity is to work on the game in your trade that you might not work on. When we're in low conditions, the market gives you an opportunity to work on capital preservation, extra patience. When the market is providing good conditions, market gives you an opportunity to practice your execution, practice your offense. Recognize what the market is telling you to work on. Make sense? Yes, you are paid for your decisions, not your time. Why wasn't the 1030 high? The manipulate. Wait, I already read that. The 1030, because we didn't displace. This move lower did not displace through anything. OTE is optimal trade entry. So this initial move, right? When we have this move lower and we go higher, where are we retracing to? This entire move, mark this on the fib. Oh, other way, sorry. OTE is 0.62, 0.79. This is optimal trade entry, which is most of the time where we're going to retrace to. Tried this long setup. I was targeting the retracement to the upside and 1 hour bearish fair value gap after the displacement move up at 8:30 EST news. I took a long on the 15-minute bullish fair value gap targeting the stop rates and possible reject from there. I had wide stops and traded micros on this, so it gave me some room to hold, and my stop was consequent encroachment of news candle. I wasn't sure on grading this setup. Any thoughts on this would be highly appreciated. Okay. Me personally, I wouldn't have the conviction to take these 2 longs. I would have the conviction to take this long or this long off this order block. This candle right here. Once this move gets backed up, this order block, taking this rebalance, this or this. I don't have the conviction to take this because we haven't had the displacement move up yet. I don't know if we want to go. I don't know if this is just going to continue to break down or not. There's no reason that I should be taking it because we haven't had displacement move. Once this high gets displaced through, I can take as many longs as I want. I don't care. But if you have the conviction for it, that's fine. I personally wouldn't. Seen price revisit 4-hour fair value gap. After this, I spotted a 1-hour order block that was invalidated, so I moved down to a lower time frame, 15-minute, and I see a bullish order block above sell side liquidity level. This got swept, made an SMT on the 5-minute. I moved to the 1-minute and seen a strong displacement from the second revisit of the fair value gap, and would have found a better entry on the lower time frame. This was yesterday. Let me see. Yeah, this would have been the soup entry. Your first PT definitely should have been this high. Again, yesterday, I personally wouldn't even have taken this. I mean, just because that low wasn't taken. The SMT was just so clean. And again, also from yesterday. What did we do yesterday? In the morning? Generate sell side. What did I also say yesterday? These lows are most likely going to come back to and become low resistance liquidity run. 2 clean-ass market maker style models in the last 2 days in the PM session. Notice all this move up. Generating sell side. Before having manipulation, displacement, sell side to the generated sell side in the morning. Going into the day, I saw higher time frame SMT and was looking long in the AM. We tapped into the 15-minute for value gap and equilibrium on the lower time frame. Had smaller SMT too. Missed my entry on the breaker, so I took it on the fair value gap created after the breaker. Thoughts? Yes, this is clean. Looks great. This is fine. Beautiful. At what point in your trading did market maker model become your go-to model? I've been stuck on 2022 model for a long time before watching you explain the market maker model. I had seen it before, but no one talked about how to recognize it and then how to trade it like you have. I know, understand the narrative associated. Market maker models is literally how the market moves. This is how I constantly think. Let's peek inside of my brain real quick. When I'm watching the market and I'm constantly looking at it, right? Every single minute, there's new data that's being fed to me. The question I'm always asking, number one, is what's the draw on liquidity? What's the draw on liquidity? Are we going to hunt buy side? Are we going to hunt sell side? Are we going to rebalance equilibrium? Are we going to rebalance to inefficiencies? Because that's just 3 things I'm focused on. That is why the market is moving. Why is the market moving? What is the algorithm doing? We are either hunting liquidity, rebalancing to equilibrium, or rebalancing to an inefficiency. One of those 3 things every second of the day, okay? Every second of the day, we are doing one of those 3 things. So I'm questioning, what are we doing? Why are we doing it? And recognizing the model in which we are doing it, okay? So for me to have high conviction, I need to have at least one of those 3 things as my bias, and I need a model that aligns with why that should work, right? When I see all of this sell side in the morning, I know this is generated sell side, but this currently is not the draw on liquidity. This is not the draw on liquidity. Why? Because we are still going higher. Why are we going higher? Because the draw on liquidity is rebalancing price to the 1-hour fair value gap. Where are we also rebalancing to? OTE of the bigger time frame range. When we continue to reject in the morning and we continue to run higher, there's no manipulation yet. We are generating sell side, so the draw on liquidity is still higher. There has not been enough information for me to recognize that we want to go to these lows yet until the model has shown it. When the model aligns with my bias, especially a high conviction model, and I can recognize it, that is when I will execute and I will go on the offensive. Make sense? Thoughts on this from 820 to 1120? I guess it's hindsight, but we all still responded to each bull order block. So if you passed the 930 dump and didn't think it was sell side of the curb, look how it continued to climb, bouncing wicks off each bull order block, and we leave behind. Yeah, this looks clean. Yeah, and again, notice every single move here as well. What are we doing? We have an initial price leg. move back to equilibrium and OTE. Another price leg, move back to OTE and equilibrium, rebalancing. Another price leg higher. This price leg here, move back to equilibrium. Manipulation, displacement. Now we're switching sides. And this becomes all the generated sell side that we expect to get ran through. I took this trade at the 8:30 bell. I entered off the 15-second inverse for value gap after sell side was taken, and we tapped into the 15-minute bullish for value gap. Is this a bad trade? No, this is beautiful. I mean, you sniped that. Okay. Why I like this trade. Number one, there was 8:30 news. When there's 8:30 news, we expect price to run at the opening bell. Now, at 8:30 is going to be the manipulation, right? Whenever we have 8:30 news, 8:30 news is most of the time going to be the manipulation. So you basically aligned it with the model, knew we were retracing back up into that fair value gap because we weren't back in OTE yet, waited for that stop to get taken off the 15-minute and took the long. I think this is fine. Now, what I would say is I wouldn't trade this with heavy size, though, because the slippage, since it is 8:30 news, we're going to whip back and forth like 20 points, right? So you want to have enough room and enough slippage to be able to not take a big loss. So lowering your size if you're going to take trades like that. Could you explain a high-quality SMT? There's at a point today where I had SMT, everything on my part, and I struggled to understand which you to respect it. SMT that's in relationship to the model and in relationship to the bias. An SMT does not mean anything, in my opinion, if it has no correlation to why the SMT should hold, right? Why should an SMT hold here? Why should this SMT work? Number one, once this fair value gap gets ran through, I know this SMT is valid. Once this gets displacement, I have even more conviction this SMT is valid, and I know this becomes a smart money reversal. But why up here is it more valid? We're at OTE of this bigger time frame range. We're in the 1 hour fair value gap, and we're at consequent encroachment of the fair value gap. When there's an SMT here, why is this good? Because the draw on liquidity is still higher. We have a recent high that hasn't been taken. We're in a 5-minute fair value gap. We're back in OTE of the range. We're bouncing off the order block. This SMT shows us we want to go higher. There has to be a reason for why the SMT should hold. And most of the time, it's an area in which we would already expect to reject or already expect to reverse or whatever. It is all about context. It's all about context. Every single thing in ICT is about context. If you're just taking fair value gaps with no context, you're going to fail. If you're just taking SMTs with no context, you're going to fail. If you're thinking that a high or low is going to get taken without context, you're going to fail. It's all context. No, there is not an SMT indicator I use. I am looking at ES and IQ. Justin, it's been 3 months profitable. Justin, I've been 3 months profitable on demo. Should I go for funded or start my own money for a month? Funded. Definitely go to a funded. Kyrie, watch the market maker model. It'll go over manipulation and smart money reversals. My market intuition has upgraded tenfold in the past few months. One of the best things I told Blaze was learning how to be able to see the market in what if this, then that aspect, and has built so much confidence in myself. Much love, brother. I love you. Hey, I love you too, Nemi. Keep it up. You're fucking killing it, Nemi. Trust me. You big things coming for you, brother. Keep up the good work. Would you say you can use SD to confirm if it was displacement if the standard deviation doesn't match your SSL? Is that correct? That is okay. That is a good thing. Yeah, that is something that I think about psychologically that I think definitely is a part of it. If standard deviation lines up with your model already, a lot of the time it's right. For example, standard deviation today lines up with where we already expect to go. Now, in the morning, but again, even in time, standard deviation is just great because there's even in times where we don't, right? Like this becomes the manipulation move, but sell side all the way down here doesn't really align. Where do we end up rejecting, though? Here. Another manipulation move. Where do we end up going on standard deviation? Here. Perfectly rejecting. Like, standard deviation is a fucking gold mine. It like, once you can recognize when to use standard deviation, and like, it's just, standard deviation is great. When you can build when you can build confidence and conviction with standard deviation, you will recognize that this shit happens every single fucking day. You cannot deny the accuracy of the market. There's people that want to deny ICT concepts, and they do it because they haven't put in the time to actually see it happen over and over and over again. It happens every single fucking day. Now, once you see it happen every day, your goal is to build conviction with it. Standard deviation settings, I got you. Can you explain the difference between market maker model and 2022 model in which model you would consider this? This would be 2022 entry. 2022 entry would be this. 2022 model is this. This whole structure, though, is a market maker buy side of the curve, sell side of the curve. This is a market maker sell model, though, because we don't know this is buy side of the curve until this move here. Now, actually, that's not true. The more that you know, like for example, when we know we're generating sell side, we know it's most likely going to become buy side of the curve, but that's more advanced. The more experience you have, the more that you'll be able to recognize buy side of the curve when it's forming, even before this move, like today. This is 2022 entry. After this, you can still take shorts, but that's not a 2022 entry. This is a 2022 entry, which is displacement fair value gap. Yeah, exactly. Market maker model isn't an entry. 2022 is an entry model. Thoughts on the PM longs? Was trimming on the bearish SMT. There was also a higher time frame SMT, of course, was putting risk as I was willing to lose. Where'd you take this? Oh, here? I personally just don't have the... Was there an SMT here or anything? Not really. I personally wouldn't touch this. And the only reason I wouldn't is because the objective had already been taken. Now, we might rebalance. I just personally don't have the conviction to take that kind of trade. But I would say, again, if this is a trade that you see yourself taking, continue to build conviction with it. It's just something I wouldn't take because the objective had already been taken. I do have a standard deviation video. I have a whole standard deviation video on my YouTube, completely free. Why does ICT get so much hate when we idolize his concepts? Just curious. What do you mean, hate? Can you explain a little bit more into SMT works and why isn't it better if both charts both take liquidity? Because it's a divergence in price. So how do I explain this? I can't. It's kind of hard to explain why. Like why? Like what's the actual reasoning as to why an SMT works? All you need to know is it's a divergence in price. NQ and ES are correlating indices, right? Correlating indices, meaning they correlate off each other, right? So when they diverge or have divergences, that most of the time shows that there's some sort of manipulation. Exactly. It's a crack in correlation, which means it's most of the time going to be manipulation. And when we manipulate, if it's followed by a reversal. I remember what you said about SD and how it's used, but I don't know how to mark it on my chart. Watch the standard deviation video. All right. Let's talk about going into tomorrow, into Friday. Let's clean up the chart here. Daily. Where are we? Retracing. Back down. We're in the daily volume imbalance. This, to me... Again, what are we doing here most likely now? What does this high become? Generated buy side. So now we're in sell side of the curve on the bigger time frame. Now, I don't know if we want to go take this low. We could. We could hold this for value gap. We could have an SMT here. Looking at ES as well, the 4 hour. we have these equal lows down here that I want to see get taken, right? We have these equal lows here. But ES still looking really, really bullish. So going into tomorrow, I'm going to be pretty cautious just because it's a Friday. And I really am kind of a mixed bias of where we want to go. It really depends on what happens in the overnight session. So I won't really give a confident bias until I see what happens in the overnight session. But notice these bigger time frame lows, this is going to become low resistance. What are we doing here on the bigger time frame? Zooming out, continuing to generate sell side. I'm expecting higher prices because we haven't had manipulation. Generated sell side, generating sell side, generated sell side, and now we have an SMT here. And this is going to become generated sell side for something possibly like this. Gotcha. Justin predicts the market again. All right, guys. Enjoy the rest of your night. Great day. Great day today. Let's keep it up. Again, if you're down on the day, if you're up on the day, constantly recognize what did I do right, what did I do wrong, journal, figure out what the problem was, and then again, continuing to learn every single day, continuing to build conviction every single day, guys. I'm so proud of everybody, continuing to see everybody grow. This is our fucking year. This is your fucking year. Let's keep working hard, guys. Enjoy the rest of your night. I will see you all tomorrow morning. Peace out.